Hey, what's up, everyone? Rosario here, and welcome to Modern Finance. Netflix is down almost 40% today because essentially they cut off 700,000 users in Russia and lost a total of 200,000 users in the last quarter. The reason for this is obvious. People are living their lives again, they're going out, they're doing stuff outside, they're canceling their Netflix subscriptions. I think everyone knew deep down in their heart that once restrictions lifted, they were going to go outside, they were going to go party, and they were going to watch movies and TV shows less. I don't think this is a knock on Netflix's long term future. I think it's just an indication that people don't like being trapped in their homes forever. And that's something that, maybe we can all be happy about, unless you're a Netflix investor like Bill Ackman and you just bought the dip in January and now you're down an additional 40%. That's really unfortunate. In other news today, I wanted to talk a little bit more about Twitter. Elon Musk said in his TED Talk in Vancouver, which is close to where I live, and I wasn't able to attend because tickets are actually $10,000, so that's unfortunate, but whatever. That's neither here nor there. I was able to watch it online for free. So to all you people who paid $10,000 for a ticket, let me know, was it worth it? Were you able to actually speak with Elon one-on-one? Did it make sense to pay $10,000 for a ticket to see in person what you could see online for free? I don't know. Let me know down in the comments below. I'm interested to find out because I love in-person events, but holy crap, 10 grand? That's crazy. Anyway, Tom Nash, who is an excellent financial YouTuber. And if you don't know him, go check out his channel. I'll link it right here. He spoke about Elon's backup plan for if he's not able to buy Twitter at $54.20 a share. And I haven't heard this talked about in a lot of other places. I was thinking this exact same thing. And I think this might be what Elon was referring to in his TED Talk when he said that he has a plan B. Elon's plan A is essentially buy 100% of Twitter for $54.20 per share. Now, that'll work out great for Elon if the board of directors of Twitter approves, and I really hope they do because it's a great offer, and it's an upscale of about 20% on the price that Twitter was trading on just a few weeks ago. So if they don't accept the offer, I'd be pretty surprised. But the reason that they might not accept the offer is really because they want to keep their jobs, and Elon has essentially said that the board is incompetent. And there's a lot of reasons to believe why the board of Twitter is incompetent. They've actually only grown the share price of Twitter at around 8% per year for the last 4 or 5 years. That's pretty weak and really underperforms the S&P 500 as a whole. And for such a high growth tech company that should be reaching millions of people and really a technology that should be spreading quickly and rapidly and people should be really excited about, Twitter is really not doing anything amazing. They are a platform, they have a lot of users, and they've been growing and maybe even shrinking in active users at a fairly slow rate. That's not great for their long-term prospects, but if they open their platform and they convince people that they're a free speech first platform, I think they can continue to grow, which is why I'm bullish on the company and I'm bullish on the acquisition. If you look at the board members of Twitter, you can see why they might be not so keen on Elon acquiring that company, because if he does, I'm pretty sure those people are going to lose their jobs immediately because Elon does not like incompetent people and he likes to target his focus where it is absolutely necessary. He uses first principles thinking, and the first principles of Twitter is to make it a free speech platform, and the current board members have not done a good job of doing that. I think they're gone on day one. So I can see why they wouldn't want to accept Elon's offer. Building on that, if they don't accept Elon's offer, what exactly is going to happen? I think Elon's plan B is actually extremely clever because, of course, he probably predicted that Twitter would enact a poison pill, and that's why he put the offer in at the price that he did, because he is prepared to pay exactly that amount of money for Twitter. And it turns out that even if the board enacts the poison pill, he could actually go out on the open market and he could end up purchasing the entire company, or at least a controlling share of the company, 51%, for about $54 billion. If that works out, that means he'll be able to control Twitter, he'll be able to replace the board, and he'll be able to keep it publicly traded and maybe not necessarily take it private, or take it private with some assistance for that same $54 billion amount. That's really exciting because the Twitter board's poison pill was kind of their last ditch effort to be able to block the sale of the company. But Elon knows that even with this poison pill, he may still be able to acquire enough of the company to take it private, or at least to have a controlling share in the company so that he can make the decisions and make sure that his agenda of free speech gets followed. The sad thing is that if Elon does end up having to acquire the company on the open market and the board does invoke the poison pill, that's going to be bad news for shareholders like you and me. So if you are a shareholder, that is. So I really hope that this doesn't happen, because it's actually going to devalue the company when you enact a poison pill. And that's actually how it's designed to work. A poison pill is supposed to be for when there's someone who you really don't want to take over the company to take over, and you think it's actually going to be better in the long run if they don't take over. And I just do not understand how anyone who's acting in the best interest of shareholders could think that Elon Musk taking over the company is not a good idea. He runs some of the best companies, some of the most well-performing companies in the world. He's been extraordinarily successful at basically everything that he's touched. And he has a plan to take Twitter from being a middling social network to being a company that really strives to promote free speech and to be the public forum that everyone's able to speak and communicate on an equal playing field. That being said, it's really exciting for this possibility. And if the Twitter board does fail to use common sense and they decide to enact the poison pill, I think there's going to be quite a few lawsuits because the board is supposed to act in the best interest of the shareholders, and I'm not sure how accepting an offer that's significantly above the current share price would not be in the best interest of shareholders, or at least allowing shareholders to vote on the acceptance of this offer. It's really surprising to me that they're even considering this poison pill, and if it in fact does end up going into play, I think there's still a good chance that Elon's plan B will work and he'll be able to capture at least 51% of the company. But let me know what you guys think down in the comments below. Is this what Elon's plan B is for acquiring Twitter? Is this actually going to work? Let me know what you guys think about Netflix. Is the future of streaming doomed? Are we all going outside and hanging out forever? Is this just a temporary blip, and is Netflix going to continue to grow? Or are there more structural problems with Netflix as a company or in streaming as an industry? I'm interested to hear your thoughts, and check out this video if you want to see how I valued Twitter and how I understand and calculated what Twitter is worth to be able to predict what Elon is willing to pay for it. But for now, guys, that's all. We'll talk to you all in the next one.